All right, I think we are live. Welcome back again, ladies and gentlemen. My name is Larry James. My company is Speak with Larry, no spaces. And what I want to talk about today is capital, collateral, and much more when it comes to the stock market. I'm going to be sharing some content with you guys today that's in line with some stock market terms and definitions. Now, if you've been following these videos, what I'm doing, I'm actually creating uh, a way for you to understand how to generate income based on your own efforts in line with what you like, what you love, or what you have a passion for, or even just maybe something you would like to learn about, like I'm doing with the stock market. I'm just actually learning about this. I'm no expert at all. I don't claim to be. I don't give stock advice or any of that. But I do, my company does teach people how to set up the foundation of an online business, which will allow you to create products or services that will allow you to create income, which is why we create businesses, right? To generate an income. Now, the way this system is created is for the first 3 months that you start out, you're going to be creating videos. Now, once you create these videos, your videos are probably going to be 1 to 3, maybe 5 minutes long, depending on how fluid you are online when you get in front of the camera, right? If you're able to talk in front of the camera comfortably, without a lot of jittering and this and that, stuttering and stammering like that, so that people can understand you, then you can possibly go longer. The longer, the better. But you don't want to focus on too much length the first month. You want to focus on understanding the terms, the definitions, so that you're able to go the next phase more knowledgeable than you were the first phase. See how that progression works? And it's going to be on your terms. So it's going to be, it's absolutely necessary that it's consistent, but it can be according to the schedule that you set up that works best for you. Now, once you create that first month, just like I just finished, this is actually, excuse me, the first video of the second phase of what I'm sharing, understanding the stock market, right? So I'm doing it in 3 phases: phase one, phase two, and phase three. First phase, terms, definitions, more things like that. Second phase, more strategies and techniques, right? And then a combination of all three on the final phase. But each one of those phases gets more intense. That's the progression. You want it to become more where you can take action right now on those things that you're sharing, right? Now, as you're doing that, you're also learning. It's also sticking in your head more and more because you're like, for my system, I have an audio podcast. So for the 90 days that I'm doing this on videos, I'm also doing it on my audio podcast. So I'm repeating the same information over and over and over, and then I'm studying on the side, and then I'm actually investing. I've actually invested in 5, 6 different stocks right now. And the way my strategy is set up, I'm basically investing in what's called ETFs, which are exchange traded funds. So you'll have a strategy how you want to invest as you gain knowledge about what you want to, how you want to grow and what your risk tolerance is. Because a lot of times, if you have a low risk tolerance, you don't want to just be taking a lot of chances. But there are ways that you can stay in the stock market simply by, you know, looking at the long term. Like I like to look at the long term, even though I'm an older person. The long term is still what I look for. I don't look to be all stressed out behind day trading and that type of thing. But today, I'm going to talk about some things about capital. Now, you got a pretty good understanding about what capital is already, probably. But a lot of these terms will be refresher. A lot of them will be the first time. A lot will be reinforcing. What you actually knew to be, the way things are. but you're going to be remembering all these and you're going to be putting them together as you're having conversations with other people, right? Because, or as you're reading different things, you'll be like, oh, I know what that is. I remember hearing Larry say that that's this, right? So we're going to begin right now. It's about 5 or 10 minutes in. What is capital? Well, capital is a broad term that can describe anything that confers value or benefits to its owner, such as a factory and its machinery, intellectual property like patents, or financial assets of a business or an individual. While money itself may be construed as capital, capital is more often associated with cash that is being put to work for productive or investment purposes. In general, capital is a critical component of running a business from day to day and financially financing its future growth. Business capital may derive from the operations of the business or be raised from debt or equity financing. When budgeting, businesses of all kinds typically focus on three types of capital: working capital, equity capital, and debt capital. Now, a business in the financial industry identifies trading capital as a fourth component. So trading capital is also added to that list in the financial industry. So again, this is exactly the same process, and that's why I'm making certain that I keep emphasizing that this is exactly the same process you would be doing, only you would be creating your videos talking about your subject, right? And you're going to be researching the things that you're going to be sharing so that you are kind of familiar with what you're sharing as you're going, over the information. The next topic I have for you is financial asset. What is a financial asset? A financial asset is a liquid asset that gets its value from a contractual right or ownership claim. Cash, stocks, bonds, mutual funds, and bank deposits are all examples of financial assets. Unlike land, property, commodities, or other tangible physical assets, financial assets do not necessarily have inherent physical worth or even a physical form. Rather, their value reflects factors of supply and demand in the marketplace in which they trade, as well as the degree of risk they carry. That's financial asset. Next, I have capitalism. What is capitalism? Capitalism is an economic system in which private individuals or businesses own capital goods. That's capitalism. Capitalism. The production of goods and services is based on supply and demand in the general market, known as the market economy, rather than through central planning, known as a planned economy or command economy. The purest form of capitalism is free market or laissez-faire capitalism. Here, private individuals are unrestrained. They may determine where to invest, what to produce or sell, and at which price to exchange goods and services. The laissez-faire marketplace operates without checks or controls. Today, most countries practice a mixed capitalist system that includes some degree of government regulation of business and ownership of select industries. Because you can see it's kind of easy for things to get out of hand if you have like a monopoly on something and no regulation. It's like, your world, right? It's normally going to be that way anyway once you get to that level. Next, what are capital expenditures or CapEx? Excuse me. Capital expenditures are funds by a company to acquire, upgrade, and maintain physical assets such as property, plants, buildings, technology, or equipment. CapEx is often used to undertake new projects or investments by a company. Making capital expenditures on fixed assets can include repairing a roof, purchasing a piece of equipment, or building a new factory. These types of financial outlay is made by companies to increase the scope of their operations or add some economic benefit to their operation. Got it? Okay. I love sharing this information because as I'm reading it, it's requiring me to process it too, right? Same thing for you. It's going to have the same effect. And if you're not really good at reading, which a lot of people are not really good at reading, you will get better. You'll get better. But the thing I like to do is just fight your way through it until you get better. Whatever you have like issues with as far as like, where you fall short in your mind or maybe factual, just work on getting better at it. Like one of the ways I share with my group too, as far as becoming better at reading, is to every morning you get up, when you get to your computer, once you fire it up, have a horoscope of your astrological sign. Like my astrological sign is Capricorn. So every morning I read the Capricorn's astrological sign out loud, right? So that I can hear it and it can process that way. Now, as you do that, it's requiring you to get better at reading. Now, it may take you a month, 3, 5 months, but you're learning more about your astrological sign and why you are like you are, right? And it helps you because you can identify that as to why you are resist or reluctant to, just take a jump out and leap on a leap of faith. You kind of like maybe kind of standoffish or kind of shyish. You kind of need somebody to push you out there. You'll know exactly why that is. The more research you do about, who you actually are. All right, the next term I have for you is, what is a capital investment? A capital investment is the procurement of money by a company in order to further its business goals and objectives. The term can also refer to a company's acquisition of long-term assets such as real estate, manufacturing plants, and machinery. Capital investments. What is collateral? The term collateral refers to an asset. The term collateral refers to an asset that a lender accepts as security for a loan. You knew that, right? Collateral may take the form of real estate or other kinds of assets, depending on the purpose of the loan. The collateral acts as a form of protection for the lender. That is, if the borrower defaults on their loan payments, the lender can seize the collateral and sell it to recoup some of or all of its losses. Makes sense, right? Absolutely. Next, we have compound interest. Compound interest, which is the eighth wonder of the world. Compound interest or compounding interest is the interest on a loan or deposit calculated based on both the initial principal and the accumulated interest from previous periods. That's why it's so beautiful to get to the point where you are gaining compound interest, though, because that's what that happens there. Now, thought to have originated in the 17th century, Italy, thought to have originated in 17th century Italy, compound interest can be thought of as interest on interest and will make a sum grow at a faster rate than simple interest, which is calculated only on the principal amount. So it's actually you're getting paid on the interest as well as the principal amount. Now, the rate at which compound interest accrues depends on the frequency of compounding, such that the higher the number of compounding periods, the greater the compound interest. Thus, the amount of compound interest accrued on $100 compounded at 10% annually will be lower than that on $100 compounded at 5% semi-annually over the same period of time. Since the interest on interest effect can generate increasingly positive returns based on the initial principal amount, it has sometimes been referred to as the miracle of compound interest. Okay? So if you get yourself in a position where you're gaining money on compound interest, you are in good shape. Keep doing that. Next, what is simple interest? Simple interest is a quick and easy method of calculating the interest charged on a loan. Simple interest is determined by multiplying the daily interest rate by the principal by the number of days that elapses between payments. This type of interest usually applies to automobile loans or short-term loans, although some mortgages use this calculation method. That's simple interest. Now, what is correlation? Correlation is the finance and investment industries. I keep messing that up. Correlation in the finance and investment industries is a statistic that measures the degree to which two securities move in relation to each other. Correlation. Correlations are used in advanced portfolio management, computed as the correlation coefficient, which is a value that must fall between minus 1.0 and plus 1.0. Now, what is portfolio management? Portfolio management is the art and science of selecting and overseeing a group of investments that meet the long-term financial objectives and risk tolerance of a client, a company, or an institution. Portfolio management requires the ability to weigh strengths and weaknesses, opportunities and threats across the full spectrum of investments. The choice involves trade-offs from debt versus equity to domestic versus international and growth versus safety. Professional licensed portfolio managers work on behalf of clients, while individuals may choose to build and manage their own portfolios. In either case, the portfolio manager's ultimate goal is to maximize the investment's expected return within an appropriate level of risk exposure. And portfolio managers may be either passive or active in nature. Next, we're going to talk about current ratio. What is the current ratio? The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. It tells investors and analysts how a company can maximize the current assets on its balance sheet to satisfy its current debt and other payables. A current ratio that is in line with the industry average or slightly higher is generally considered acceptable. A current ratio is lower than the industry average, may indicate a higher risk of distress or default. Similarly, if a company has a very high current ratio compared to their peer group, it indicates that management may not be using their assets efficiently. The current ratio is called current because, unlike some other liquidity ratios, it incorporates all current assets and current liabilities. The current ratio is sometimes called the working capital ratio also. All right. So I hope you guys got something out of that. I wanted to make sure that I get those definitions in. And again, this is video number 1 of month number 2 of this 3-month process, right? So you would be doing the same thing if you were following along this process. You'll be starting your 2nd month on your way to completing all 3 months, right? Each month, you're going to create a product. That product, you're going to put a price point on, and you're going to sell that product. You're going to market that product. You're going to hire someone to do the marketing if you don't know how to market yourself. And if you don't have the finances to market yourself, then you learn how to do that, right? It's not rocket science. It's just uh, if you have finances, you can outsource that rather than have to learn it. But if you don't have finance, it's like writing a book. When I wrote my first book, yeah, I'm a published author too. When I wrote my first book, I didn't know I had to know anything about marketing. I was writing a book. I was thinking like, once I write this book, boom, the world changes. Nothing happened until I learned how to market. And then once I learned how to market, my next move was to learn how to outsource that so I don't have to do that. I just want to do what I do and then outsource the things that need to be done and, managed throughout the process. But it's a lot of fun if you this is actually your niche. This is what you enjoy doing, and you'll know whether it is because you'll get comfortable with it within that 90 days. You'll see results. You'll enjoy some of those results. You'll see people change their perspective about you or their attitude about how they treat you, right? Because they'll see you in different places because you know the internet is worldwide. If you go live or if you create Zoom videos like these and then package them, you can sell that worldwide. Once they're packaged, they're going to be going worldwide, right? You want that, but you want to be you want that to be targeted to people that are interested in what you're doing. You don't want to just send it to everybody because that costs. It costs to market. But if you market to specific people who are interested in learning the stock market, like in my case, which there are a lot of people interested in learning the stock market right now because over time, people are beginning to see that this is really a good way to invest money because investing money in a bank, just putting it in the bank for safe, secure keeping is not always the best plan when, you can access your money really quickly from the stock market if you need it, you know what I'm saying? But if you don't, you can invest in ETFs or dividend stocks that pay dividends and get 3, 5, maybe up to much as 10%, sometimes even more on your return on your money, So, it's a better place to put it if you're strategic about it, right? If you don't just take a lump sum and put it out there hoping it works. No, you can't do it like that. That's not the process, right? That's not the process to win at all. So don't do that. But anyway, if you want to, again, have a one-on-one with me on this video as I'm creating these videos, feel free to reach me at larry5969@sbcglobal.net. And in the subject bar, in the subject section, type in "Let's Talk Stocks." And then I'll know that you want to come on the next Zoom video that I do. And then I'll send you a link. And when I do these at 7 o'clock on Tuesdays and Thursdays, you'll be around your computer or access close to where you can access a computer at 7 o'clock Central Time. And then I'll just let you in, and we'll just be talking back and forth. As I'm reading some of those things, then I'll ask you, did you know that was that? Or what was your perspective on that? How did you feel about what is collateral or what is capital investment? Did you know what that was? And then that'll be helping you to grow and get a little time you can, announce what you do. Do you have a website? Do you have a blog? Do you have an Instagram, page or whatever? That's how this game is played, ladies and gentlemen. These are free right now. But when I sell them, they're gonna, no, that's not free. It's forward capital, right? And it's my creation, just like it will be your creation. That's what would be so beautiful about it. It didn't exist before you put it out into the world and allow the universe to reward you for it. And it will. That's how it works. But you got to get it from here to where other people can access it. Right? Simple as that. All right. Again, my name is Larry James. My company is Speak with Larry, no spaces. And as always, share with someone else what I've shared with you.